Hello everyone, and welcome to today's session in which we will cover how to sell a fixed asset using a free text invoice. And this is sequel of my previous video where we have sold a fixed asset using a scrap method. My name is Pir Khurram Rajdi. I am an MCT and I am a regular trainer on YouTube, and I provide training on functional and technical topics. So today's agenda will be introduction about the topic, which is the disposal of fixed asset through sales, and what are the prerequisites. We will discuss it, and then a scenario will be also discussed in which we will basically demonstrate one fixed asset and how to dispose it off, and also how to create the free text invoice for selling that asset. And lastly, we'll also discuss about voucher posted. Okay, so to start with, all the fixed asset transactions which are in balance sheet, like acquisition, like accumulated depreciation, and others will be reversed, same as like those are reversed in the scrap. Same sale in the sales of fixed asset also, these need to be reversed. And the type of fixed asset transaction to sales are basically acquisition adjustment, depreciation adjustment, any write-ups or write-down or revaluation transactions. So these will happen when you sell the fixed asset. Okay, so ledger account basically is credited for disposal value of fixed asset, and the debit is posted to the offset account such as bank or account receivable in case of customer, like we are here discussing about free text invoice. So in this case, the customer will be debited, and disposal value means P&L account will be hit, which is defined in the main account in the free text invoice. Okay, so the normal transaction which will happen are basically accumulated depreciation is debited, which was credited at the time of depreciating an asset. So at the time of depreciation, if you remember, you depreciate the expense account that is debited. So when you depreciate the asset, and that the entry goes to debit, entry goes to the expense account as a debit entry, and then credit goes to the accumulated depreciation. So that need to be reversed at the time of disposal sales of an asset. So that need to be debited here, and then the P&L account will be basically credited, and also it will be debited. And acquisition account, which is were earlier on debited, so it need to be also credited. It was debited at the time of acquisition of the asset. And similarly, the net book value will be debited as well as the credited, whatever it happens, like if there is a loss or if there is a profit. So it is dependent upon that, how much will go to the loss and how much goes to the profit. And similarly, there are two additional entries. One is account receivable, which is debited here because this is an asset. So the account receivable at the time of free text invoice posting will be debited, and credit goes to the revenue account or the P&L account. In our case, it will be gain and loss disposal of asset account selected. So what are the prerequisites? Similarly, the prerequisites are like ledger accounts need to be existing, created already, defined. For example, for the asset acquisition and depreciation for the current year, previous year, and net book value of the asset. So these accounts need to be already defined. Account settings also need to be defined in the fixed asset module in the posting profile area, and that can be you can go there when you browse to the fixed asset module and go to the setup group, and inside the setup there is fixed asset posting profile. There in the first tab called disposal, you need to select the sale in the field above the grid, that is the lookup field, and that will be shown in this screen as well. You can see at the bottom first tab disposal, first tab is shown, where you can select here the sales instead of scrap, and then you need to define the post values line by line. For this book, SL straight line service life was selected, so grouping all is selected instead of group or table. For example, for fixed asset group or specific asset, we have selected all. So that means all the asset will, when they are sold, so they will be, these main accounts will be used in that case. So in the depreciation prior year or this year, we have in the main account accumulated depreciation account 180 and 200, and on the offset side, all the accounts are loss and gain of the fixed asset. So that is a P&L account, a profit and loss account. And in the acquisition value side, we have selected here the whatever the account was selected at the time of acquiring the asset. The same asset account need to be defined here in the main account. And in the net book value, we have also selected the P&L account, which is already defined in the offset. And then depreciation adjustment this year and depreciation adjustment prior year also define the accumulated depreciation account in the main account, and on the right hand side, the same P&L account is defined. So these settings need to be already defined. And then we now discuss about the scenario in which basically the asset was acquired on January 1st, 2021, and it was sold on January 1st, 2023. The acquisition price is 36,000 and service life for the asset is 6 years. Depreciation method is straight line service life, and once you divide 36,000 acquisition cost by 6 and by 12, that is 12 months and 6 years. So per month value for depreciation will be 500 USD, and since it's straight line service life, so the equal amount will be expensed out each of the month. So the net book value at the end of day, that is after 2 years, will be calculated through this formula, that is acquisition price, that is 36,000 minus depreciation, that will be 12,000 USD for 2 years. So that we will see in a moment. So in this one, you can see in the book SLSL, you can see the acquisition cost 36,000 is shown, depreciation amount of 12,000 is basically debited, and the net book value in this way, 36 minus 12 will be 24,000 net book value. Okay, so the customer free tax invoice screen is shown here, which you can browse to account receivable module and then invoices group, and then all free tax invoices link need to be clicked. So once it is clicked, so it will open a form where you can select the new command, and then you can enter the details such as shown in the screen. The customer account need to be selected, and then all the values are defaulted. Basically, if it is not defaulted, you need to define basically currency, terms of payment, method of payment, and the most important in the invoice line is the description, the main account, which is the P&L account or the revenue account, which will be hit, and the quantity, maybe if it is 1, okay, leave it 1, and either you put unit price or amount value on which the asset is basically sold to this customer. Okay, then there is a line detail segment at the end, at the bottom, you can see invoice text can be filled up for the details, and the fixed asset number can be selected from the lookup, which need to be disposed of. So book will automatically retrieve from whatever it is attached to the fixed asset number. Okay, so once it is posted, free tax invoice, so you can see in the fixed asset book, basically the status will be shown now. It is changed from open to sold, and in the issue group, you can see the disposal date, which is 1st of January 2023, and the sales value of 5,000 is shown. So the depreciation periods as per the service life, which is 6 years, are divided, are basically multiplied by 12, that is 12 months per year, so 72 will be shown here. So after the disposal sales of the asset, you can see the sales value 5,000 USD is shown, and then the depreciation adjustment, because this asset was basically not depreciated before. So on the 1st of January to 23, all the depreciation amount goes, including the 1 extra day to that 1st of January 2023, all the depreciation amount is basically posted, and the P&L account is showing the loss here because the net book value is higher, that is around 23,000, but it was sold on 5,000, so remaining will go to the P&L account. So this is the voucher posted, and here we can see easily that account, as we have already discussed, accumulated depreciation now will be debited, which was credited at the time of depreciating the asset, and depreciation expense basically is also here debited. Basically this is the credit entry and this is the debit entry when you depreciate the asset. So accumulated depreciation, which is now posted on 1st of January, is also reversed here because of disposal sale of the asset. So this is the reversal, and tangible fixed asset here you can see 36,000. It is now credited, which was debited at the time of acquiring the asset. And at the bottom you can see the entries which are basically account receivable is debited because customer is an asset or the account receivable is asset, and there is an extra amount of sale tax 362.50 cents. So that is credited, and same 5,000 goes to the P&L account or revenue account selected as a main account on free tax invoices. So the remaining will go to the offset values, and that is gain and loss disposal of asset here. Okay, so these are the fixed asset transaction when viewed from the book, and this is also showing us basically the acquisition prior year is now reversed with the credit entry, and acquisition here it was debit entry. Okay, so similarly there will be the depreciation adjustment here together all at one day, and here it is shown as a credit entry basically which is now reversed or credited. So this is $16.13 is for 1 day of January, and this one is for two years, 24 periods, that is months. And this is the disposal sale on which you will sell basically to the customer. And these are the similar entry as shown in the table. So we'll start our demo, and we'll go to D365 Finance and Operation, and then we can go to basically fixed asset module, and I will start from the setup which I have discussed already and go to the fixed asset posting profile. And here you can select in the ledger accounts fast tab disposal sale, and since we are interested in SLSL this book, and so here we can see the P&L account disposal gain and loss disposal of asset is defined, and at the bottom in the disposal fast tab you can see sale and scrap values. So in this one you need to select sale, and you need to define the book which is associated or linked with the asset concerned on which you need to basically dispose of. So here basically the same account which we have earlier on discussed. On the offset account side, all is the same account, that is gain and loss disposal of asset. And on the left hand side, for the depreciation prior year or this year, or depreciation adjustment this year or prior year, we have accumulated depreciation account for all these 4 lines. And then for the acquisition value, basically the asset account is selected, which we need to reverse at the disposal sale of the asset. And in the net book value we have selected the same offset account, which is disposal gain and loss disposal of asset account on the net book value. So this is the prerequisite. Okay, after defining this you can go to the account receivable. First I will just show you the fixed asset. Okay, and this is our vehicle 12, and we can go to the books here, and we can check that straight line service life is the book which is assigned with the depreciation profile of the straight line service life. So there can be so many methods which I have earlier covered in my previous videos for the fixed asset. So but in this straight line service life, which has equal amount for each of the months, is selected. So here we can see acquisition date is 1st of January 21, and the status is shown as open, and disposal date is not here, sales value is not here, which at the time of posting the free text invoice, these values will be updated, like status will be also updated here, and disposal date and sales value will be updated. So at this time, acquisition price, which is the acquisition cost, 36,000, and the service life 6 years. If we multiply it by 12, so depreciation period will be 72 months. And then also we can check the valuation here, which will show in glance the acquisition cost, which is 36,000, and then depreciation expense is 12,000. So if you minus 36 by 12, so it will be 24,000 net book value. So what we can do is now we will go to the account receivable module. In the account receivable, you can go to this invoices group and all free text invoices, and here we can define a new invoice, free text invoice, a sales invoice. The difference is in the sales invoice you have a sales order, in free text invoice you don't have any sales order. So in sales order you can define various inventory or non-inventory line or service lines. So here we can select the new command, and then we can select a customer to whom we are selling the fixed asset concerned here. So I will select this Contoso Retail San Diego, and then in the currency, if it is not selected, you can select currency, but it is defaulted from the customer here. For the terms of payment, I will select cash, and the method of payment is check, and the invoice date will be shown. Invoice date will be here, 1st of January 2023. Okay, so then I can put a description here like disposal of asset, or whatever value you need, you can select it. Okay, so here the account which is basically selected will be loss, gain and loss of disposal of asset. So this will be the main account which I have selected. You can select any of the revenue P&L account. So in the unit price 5,000 USD, I am selling this asset to the customer, and then here in the fixed asset number you need to select the fixed asset. It need to be disposed of as sales. So this is vehicle number 12. Okay, so then you must check the totals whenever you are posting an invoice, whether it's vendor invoice or customer invoice. This is a precautionary measure. Before posting anything, you need to just check the totals. If the sales tax are correct, invoice amount is correct, and the subtotal is correct. Okay, so once it is done, then what you can do is just post the invoice, and then we can select the post option as yes. And if you want print invoice, you can also select that option, but I am not selecting it. So this invoice need to be posted, and we will then see the voucher for the invoice which is posted. So the invoice is now posted. We can go in the related information group and select the invoice journal, and from this invoice journal we have the option to open the voucher. Okay, in this voucher we can see various entries which are basically available here. So we can see there is a depreciation amount for 1 day is posted, that is debited. Depreciation expense is debited into the from the depreciation expense account, and then the credit goes to accumulated depreciation for 1 day. Okay, so now it also includes in our total accumulated depreciation, which was 12,000 earlier, so 16.13 cent is also added, and then it is debited. That is before it was credited here, and also for the previous depreciations which have been basically posted. So the accumulated depreciation is now debited in order to reverse that, and tangible fixed asset which was earlier on debited at the time of acquisition is now credited in order to reverse this. And apart from this, all the remaining entries for the net book value is now basically debited and credited. Okay, so also you can see here account receivable is also debited, and the tax is credited, and for the main account which we have selected in free tax invoice is also credited here. So these are additional entries for the customer free tax invoice. So, and now we need to go to our asset. Okay, so this is the asset, and we can go to the valuations, and here you can see the depreciation earlier on was 12,000 for 2 years, and for 1 day 16.13 cent is also as per depreciation adjustment, and then 5,000 amount is for the disposal sales, and remaining is the loss for this asset because net book value was around 24,000. If you add up 5,000 to 18, so that will be around 24,000, but since it was sold below the net book value, so the remaining will go to the P&L account. So we will just close it, and we'll also go to the books, which is SL, and we can see on the right hand side in the issue, disposal date is 1st of January 23, and sales value is now also mentioned here. Apart from this, the status is now changed from open to sold. In this way, we have basically sold the asset as a disposal sales, and this is done through free tax invoice available in account receivable. We have covered basically the posting profile for fixed asset when you sell the asset. So for the sales, it need to be defined in the post values that will cover the depreciation previous year, the current year, and also the net book value, where we have assigned a P&L account on both hand side, on the main account and offset account. And then we also have basically for the depreciation, and for the acquisition also we have selected the main account for which we need to reverse the value, the asset account, and on the offset it is again the loss and gain of the asset account, that is P&L account. So in this way we have covered the topic how to dispose of an asset through the sales approach. Before we have covered the scrap, which is sold on the zero, which is disposed of on a zero value. So I am hopeful this has brought you some information which can be helpful in performing these procedures. Thank you very much, and if you have any comment, just let me know. Thank you. Take care. Bye bye.